The global policy panic is the narrative for our Q1 outlook. 2018 was all about how the credit facilitation by the central banks and the politicians all of a sudden had a total stop. The credit cake, in other words, became smaller for the first time since the great financial crisis in 2008, 2009. This credit cake, which has been driving all of the growth almost, and certainly most of the stock market valuation, was all of a sudden coming down in size. But not only was it being smaller, this cake, but the price of the actual pieces of cake was also getting more expensive, as initially first the Federal Reserve hiked interest rate and continued to be extremely hawkish throughout this, all the way through December. But at the same time, we had stealth intervention, reduction in the ECB and the Bank of Japan's balance sheets. Yes, they were still expanding, but at a much slower pace than we saw in earlier years. What did this do to the market? It created a huge recycling out of money into dollars away from emerging market and valuation in the stock. And end of the year, Q4 was a nasty reminder that if you base all of your future growth on credit facilitation, not on reforms, not on productivity, then you end up in a different place. As we go into 2019, this will be changed in our opinion. Q1 will see a massive amount of intervention. It would at the same time see the central banks reducing the price of money. What is left by the end of Q1, in our opinion, is that the price of money will be lower, the price of energy is already lower, and there will probably be a light deal between China and the US. What will not change, however, is the size of the credit cake, and that remains the big question for 2019. But do check what is on home.saxo, where we will be contributing throughout the quarter. I wish you good luck in Q1.